Good day, grade 12 learners, and welcome to today's accounting lesson. My name is Mr. Simbi, and this lesson is brought to you by the Gauteng Department of Education in collaboration with Sci-Bono Discovery Center, and it is being broadcasted by the Pakama Research and Development. In today's lesson, I'm going to take you through one of the most interesting topics, which is our creditors reconciliation. I know most of you have a challenge with creditors reconciliation, and I'm hoping that today I'm going to help you. I'm going to go through the creditors reconciliation step by step. Once again, welcome to today's lesson. As I said earlier on, I'm going to be dealing with creditors reconciliations. Creditors reconciliations. My objectives for this lesson are very simple. In this lesson, I'll be focusing on the following aspects. I want you to understand the need for preparing the creditors reconciliation. So we're going to talk of the reasons why we prepare the creditors reconciliation and the key concepts that relate to our creditors. This is very important. You need to know the concepts that relate to the creditors, as well as the preparation of the creditors reconciliation. So I'm going to get into the preparation. How do we prepare it? We're also going to cover that in this session. You have to understand that whenever we deal with creditors, it is important, very important, that we also talk to the internal controls. It cannot be accounting without internal controls. So I'm going to talk on the internal control of creditors. I'll be talking on that as well. Now, what is the creditors reconciliation statement? When you talk about the creditors reconciliation, what is it exactly? Now, the creditors reconciliation statement, it is the process by which creditors, remember, keep in mind, it is the process by which creditors account, which is in the creditors ledger, is now compared. So there has to be a comparison, all right, is compared and reconciled against a monthly statement. This is very important where we are going. All right. So it has to be compared and reconciled against a monthly statement which we receive from the creditor. Now, you have to understand that when we are doing that, we have to do that once the two records are reconciled, the account becomes payable. You now have to know which one is owing. In other words, once you reconcile, you would know the amount that you should be owing to your creditors. Now, when we look at the creditors ledger, you should be able to reconcile it to your creditors statement. So it becomes the creditors ledger together with the creditors statement. Now, it is very important that you know that the creditors ledger is prepared by the business. The business is us in this particular case. So we get to prepare the creditors ledger. But as I said earlier on, remember the creditors statement is coming now from our supplier. So this one is coming from the supplier. You have to remember this as we are going into today's lesson, that we do the ledger, we prepare the ledger, but the statement is sent by the supplier. Here it is issued by the creditor, who is the supplier, the creditor or the supplier. Now, I want to talk of the concepts that relate to the creditors' reconciliations. Now, number one, what is a creditor? If we were to define a creditor, how would we define a creditor? It is an entity or a person. By an entity, we're simply saying it can be a business, an organization that is an entity, or a person. Now we're talking about an individual. So it can be an entity, which is a business, or a person, which is an individual who supplies goods or services and receive payment at a later date. So the aspect of a creditor has to be that goods are supplied to us, but we pay at a later date. Very important. We don't pay immediately, but we pay at a later date. Now, there are source documents that we are going to talk about today, and one of them is the original invoice, a source document used to record credit purchases. As we go on later, I want you to remind me that Mr. Simbi said whenever we see an invoice, it has to relate with a sign which is a plus. It's going to help us where we are going. An invoice, it has to move with a sign which is a plus, in addition sign. Now, in the creditors ledger, this is the account where we record all the credit purchases and the payments as well as the discounts. Remember, we need to keep track of our purchases on credit, our payments, as well as the discounts that we are going to receive from our creditors. And all of these are recorded in what we call the creditors ledger. Okay? And then it is important for us to understand that whenever we are dealing with creditors, we also receive trade discount. This is the discount that will be allowed to traders. The creditors list now, it is a list of amounts that are owed to creditors. Okay, so it has to do with the amount of creditors that we're having. For example, if we're having creditor A, creditor B, creditor C. So if we're owing them particular amounts, therefore the total amount, if we're owing these ones 100, if we're owing this 200, and then if we're owing these ones 300, this is what we call the creditors list, a list of the creditors whom we owe money. You should know this from your grade 10 as well. Now, credit purchases, these are items bought but not paid for at the time of the purchase. Now, we have already spoken to this. And the creditors control now, it is an account, a summary of all transactions with creditors, a summary of all transactions with creditors. You would remember there used to be a question, I think, even in your grade 10. Now that you're in grade 12, you would remember this, why the balance of the creditors control should be the same as that of the creditors list. It is because the creditors control is a summary. It is a summary of all transactions with creditors. All right. And then lastly, I want to talk about the CJ, the creditors journal. It is the book of first or original entry for our credit purchases. That is our creditors journal. Very important that you know that. Now, when we talk about the creditors reconciliation, remember, this is what we are focusing on today, creditors reconciliation. There are two methods of creditors reconciliations. Okay. Now, the first one, we're going to talk about the reconciliation of creditors ledger and the creditors statement. In today's session, we are going to be focusing on this one. This is our area of focus today, whereby there's the creditors ledger. Remember, we agreed the creditors ledger is done by who? It is done by us. And the statement, okay, who sends the statement? Our supplier. So in today's lesson, we're just going to be referring to them as them. Okay, so you have the creditors reconciliation of creditors ledger. Who does the ledger? Us. And the creditors statement that comes from our suppliers, which is them. Remember the us and the them in today's lesson. Now, here's the creditors ledger prepared by the business. As I said earlier on, this is done by us. Now, the creditors statement, it is very important that you know that it is an external document, all right, which we receive from our creditors, which we agreed already it is them, all right. So they get to send us a statement, which is an external document. So remember, this is the number one type of creditors reconciliation. In this case, we are talking to one creditor who sends us a statement. All right. And then the second one, it is the reconciliation of the creditors control and the creditors list. This is the second one, the reconciliation of the creditors control and the creditors list. Remember, who does the creditors control? Prepared by the business, it is still us. And who does the list? It is prepared by the business, so it still remains us. But very important for you to know that we covered this in grade 10. In today's lesson, I'm going to be focusing on only number one. That is my area of focus today, on number one. All right, creditors control and the creditors list. Now, I want us to look at this. It is very important that you just know what your creditors control should look like. Okay, so this is our creditors control. And in simple words, you have to know which side your creditors control increases and decreases on. I'm not going to spend time here because this is not my area of focus today, but I'm just going to pass through it as I go on. Okay, so your creditors control, remember, it is a liability, so it's going to increase here on the credit side and it will decrease on the debit side. And we are going to be reconciling this with the creditors list. We're going to be reconciling with this with the creditors list. In our creditors list, we have Mr. Baloyi here with 5.5. we have Mr. C. Hatle, and then we have Mr. Gumbi as Mr. Klume, and their total is 19,660. That should be the same as the balance in your creditors control account, which is 19,660. When these two talk to each other, then we would have completed the reconciliation aspect. But remember what I said, my focus is on the statement versus the ledger. So I'm going to quickly go to that area. Remember, the word reconciliation itself simply means to bring differences together. To reconcile means there are differences. So where are the differences? What causes the difference? How can we solve the differences? So that is what we are going to focus on in today's lesson. Now, there are reasons why we have differences. And now I want you to follow me. Now, when we talk about the reconciliation of credit statement and the creditors ledger, these reasons explain why the balance on the statement, remember, we received the statement, why that balance is different from the one on the ledger, which is prepared by us. Okay, so we want to now get into the reasons. Why are there differences? Because for us to reconcile, there must be differences in the first place. Now we want to know why and where are the differences coming from. Now, number one, it is when the statement date differs from the closing date in our creditors ledger. So you have to understand that creditors, they will close their books at a particular time. Then they send us the statement. And then you may find that the statement has a date on the 25th. The statement has a date on the 25th. Yet in our ledger, we have the date maybe of the 30th. So you would find that there are differences, therefore, whereby there are items which are in the ledger but not on the statement. So my first point has to do with dates. Dates when the statement date differs from the closing date in the creditor's ledger. All right. The next one is when transactions such as your purchases, your returns, your allowances, your payments, and your discounts. It is important that you understand these ones: your purchases, your returns, your allowances, your payments, and the discounts. These are the aspects we're going to spend much time on today. When these transactions could have been omitted or entered incorrectly. So you have to remember we are going to have aspects which are omitted. We're dealing with omissions. Or they could have been entered incorrectly in the creditors ledger account as well as on the statement. So we are talking about transactions now which are entered incorrectly or they are completely omitted. This therefore brings about differences. If an aspect is recorded in the statement but omitted in the ledger, there will not be an agreement between the two. Or if an amount is recorded incorrectly, that is understated or overstated, therefore we will definitely have differences. The third aspect is when a discount could have been deducted on the ledger but not accepted by the creditor. It happens at times when the creditor says, if you pay by this particular date, you will qualify for a particular discount. So when we send through our payment and then maybe we did not get the dates correctly, then we already record discount on our part, yet the creditor rejects the discount. It can be for several reasons. Maybe we're supposed to pay a particular amount for us to qualify for the discount, or the payment was supposed to reach the creditor at a particular date. The moment we don't fulfill that those demands, we then will not qualify for discount. Therefore, we might have discount in our books, yet on the statement there is no discount. Or they could have given us discount, yet in our books we have not recorded any discount. That can also be the reason why we may have differences. Now, the other aspect has to do with posting or recording errors. I'm going to expound more on this one as we go on in today's lesson. The other one has to do with addition or subtraction errors. You can make a mistake in adding or you can make a mistake in the subtraction as well. Now, the reasons for the differences. Now, errors made on source document. Remember, we're going to talk about source documents. And once there are errors on the source documents, you will then find that when we record a source document which has an error, then our amounts are not going to agree. So there can be errors which are made on the source document. We're going to spend much time as well on the source documents. It is very important in today's lesson. Now, incorrect addition in the journal, that is casting errors. Okay, casting errors simply means addition errors. Once we add incorrectly, we're going to have also differences, as well as posting of incorrect amounts to the ledger accounts. Once we post incorrect amounts, we will definitely have differences. And posting to the incorrect side in the ledger account. For example, if we are in the creditors ledger, and remember, it's a plus and it's a minus, we are supposed to record an amount on the debit side, but if we put it on the incorrect side, that means we put it on the credit side. Once we do that, it is going to create differences. I'm going to walk with you today through such transactions. Please stay tuned. The next one has to do with incorrect balancing of ledger accounts. Incorrect balancing of ledger accounts. If we incorrectly balance our ledger accounts, we will definitely have differences. Now, there are quite a number of errors that can happen, several. Now, I'm going to take you through each one of them. Error of omission. Now, when you talk about the error of omission, it simply means the transaction is not recorded at all. It is completely omitted. Once it is completely omitted, it has not been included. Therefore, we need to reconcile. And then the error of commission. Now, an item is entered to the correct side of the wrong account. All right. Now, it means it is on the correct side, but in the wrong account. Therefore, it will create differences, definitely. And then the next error is the error of principal, an item which is posted to the correct side of the wrong type of account. For example, cash paid for repairs, which is an expense, but then is debited to an asset account. All right, I want to go to the next error. It is the error of original entry. The error of original entry. It is an incorrect figure which is entered in the records and then posted to the correct account. Original entry. It simply means the error was made in the origins of the transactions. Error of original entry. An incorrect figure entered in the records. Once an incorrect figure is entered in the records, our posting is going to be affected as well. Reversal of entries. The amount is correct with the reversal of entries. The amount is correct. The accounts are used are correct. The accounts used are correct, but the account that should have been debited is credited. In other words, we have the right amount, the right account, but the account that should have been debited is then credited. You're going to see I do have such transactions in today's activity that I want to work through together with you. So please remain tuned. Now, how do we correct these errors? Because whenever there are differences, there has to be procedures, there has to be ways in which we can correct these errors. So I'm going to take you the error as well as the correction. If we have an incorrect entry in the creditors ledger, for example, wrongly credited the account. If we have wrongly credited the account, we have to correct it by recording it on the correct side of the creditors ledger to cancel the entry. All right. Now, the next one is when an amount is overstated. An amount on the debit side of the creditors ledger. If an amount is overstated, you calculate the difference, then you record on the credit side. We are going to use this method of calculating the difference. You focus on the difference. If an amount is understated, the amount on the debit side of the creditors ledger, once an amount is understated, you also have to calculate the difference. You have to calculate the difference, then record it on the same side. So this is the key. With overstated, you record it on the opposite side. Okay? With overstated, you record it on the opposite side. This is if it is overstated, you record the difference on the opposite side. But if it is understated, you have to record it on the same side. This is the difference between an amount that is over. Over simply means we recorded more. So if we recorded more, we have to correct it by putting it on the different side, the opposite side. But if it is under, it means we need to increase it. So we record on the same side. Now, what about if returns are entered as purchases? All right. So in other words, if our returns are recorded as purchases in the creditors ledger, now what do? We have to double the amount and record it on the debit side. It's going to be more clearer when I do activities with you. All right. So now we are going to get deep now into calculations. I want you to have your calculator ready because we are about to start with figures. All right. So our first question paper is going to come from the NSC November 2020. NSC November 2020. And it has to do with Ekasi traders. Ekasi traders. It says, Ekasi traders buys goods on credit. Ekasi traders buys goods on credit from Tembeka suppliers. So for it not to confuse you, you just have to know who is who. In this particular case, Ekasi traders. Ekasi, we are going to be Ekasi. We are always the trader, okay? So Ekasi traders, this becomes us, and then we buy goods from Tembeka suppliers, which is them. So it is us and them. Remember, us and them. We are Ekasi traders and they are Tembeka suppliers. All right. And then it says now, required. Now, 1.2.1, use the table provided to indicate the changes to, number one, the creditors ledger account in the books of Ekasi traders. Remember, who did the creditors ledger? This was done by us. We do the ledger, all right? And the creditors reconciliation statement. So we are going to reconcile because there's a statement now which might be having errors. So we're going to do the creditors ledger as well as the creditors reconciliation statement. I want us to go to the information. Now, when you come now to your ledger, you have to understand the ledger before you go anywhere. You have to understand the ledger. You can see here it has a debit as well as a credit. You have to understand the ledger. In the ledger, remember, the ledger is prepared by us. Don't forget, the ledger is prepared by us. On the credit side, it will increase. It increases on the credit side. The ledger increases on the credit side. And then the ledger decreases on the debit side. On the debit side, you have your minus. So these are very important, very important. Before you answer such a question, always make sure you have your signs. On the credit side, it is a plus. And then on the debit side, it is a minus. Then you have to now know your source documents. For example, number one, your invoice should always be a plus. In other words, when you analyze your ledger, before you begin to do the reconciliation, you must be able to look at the ledger and analyze it and look at it and see if everything is okay. For example, your invoices must be on the plus side, which is the credit. Your invoices must be on the plus side, which is the credit side. Okay? For example, here is an invoice. It is on the right side. That's what it means. And then the next one, it is your EFTs. Remember, we have to pay our creditors. Your EFTs are going to be minus. In other words, they have to be on the debit side, as you see here. Are you still following me? All right. The next source document, the aspect that you have to look into is your debit notes. You have to consider debit notes. And your debit notes must be on the minus side because debit notes simply means we have returned goods to the supplier. It should decrease what we owe the supplier. So once we return goods, it should be on the debit side. Okay, so which is a minus. I'm just going to write here debit, but already you are following. All right, and then so this also is on the right side. Okay, and then your invoices, we have already spoken to that. It is on the right side. Your invoice here, it is on the right side. Your debit note, okay, 9.7. Let me ask you, is this debit note on the right side? What do you think? Should your debit note be on the credit side? Remember, your credit side is a plus. So should your debit note be on the credit side? Definitely note. Your debit note should be on the debit side. So already here we have a reason why our reconciliation should be done. We have a reason why the ledger and the statement may not agree. Why? Because we have recorded a debit note on the credit side, whereas a debit note should have been on the debit side. Okay. Now, the next one is a general voucher. This one has to now do with transactions that are going to follow. But then the last one becomes your payment and discount. Your payment and discount of 92.6. This is definitely on the right side. Remember, your payments, that is your EFTs, and discount come to the debit side. I want us now to analyze the statement. We're analyzing the statement now. When we're in the statement, you have to now take it from this perspective. It is them, the suppliers, looking at us. So when they sell goods to us, they consider us to be their debtors. Exactly, we are their debtors. In that case, the statement would then increase on the debit side. On the debit side, you're going to have a plus. But on the credit side, you're going to have your minus. Okay. All right. Let's now see if items are recorded on the right side. The first one is an invoice. Should an invoice be on the plus side? Remember, I told you your invoice should always have a plus. So in this case, does our invoice have a plus? Yes, our invoice has a plus. So this is on the right side. The next one, a receipt. We have paid them. Should be on the credit side. Credit side here is a what? A minus. So is this on the right side? Definitely yes, it is on the right side. A credit note. What does that mean? Okay, goods returned. What side should it be? Definitely, you guys are right, on the credit side. An invoice, again, remember, we have purchased goods, so it should be on the debit, another invoice on the debit, and then a credit note should be on the credit side. So on the statement, things were good. Here, things were good. They were on the right side. But there could be other reasons why the balance here of 157.4 is different from the balance which is in the ledger. And that is why we are going to do the reconciliation. Okay. Now, we have discovered some errors. We've discovered some reasons why there are errors and why the recon is necessary. We've discovered some errors between the ledger and the statement. Number one, it says, invoice number 289, invoice 289, all right, was incorrectly reflected on the account of Tembeka. Okay, Tembeka is them. Okay, so invoice number 289, you just have to know your invoice comes with a plus. Okay, your invoice 289, it was incorrectly, okay, reflected in the account of Tembeka in the creditors ledger. These goods were purchased from Tami Suppliers. So Tami Suppliers is a different supplier. Tami Suppliers is a different supplier. Okay. So these Tami Suppliers should not have been included in our Tembeka Suppliers creditors ledger. All right. And the error is it's an invoice. Okay. Let's look at it. Here is the invoice, invoice number 289. Okay. And it is for 49,100. Remember, we added something in the ledger of Tembeka Suppliers, which has to do with Tami Suppliers. Is Tembeka the same as Tami? No, these are two separate creditors. So we took aspects of Tami Suppliers and we recorded them in Tembeka. That should not have been the case. What then do we do? That means we have to correct this. The first question you have to ask yourself is, who made the error? Is it them or is it us? It will tell you where to go and make the correction. If we make the error, we correct it in the ledger. If we make an error, we correct it in the ledger. But if they make an error, it has to go to the creditors reconciliation statement. I want you to follow again. If we make an error, again, who prepares the creditors ledger? It is us. So if we make an error, if it's us who made the error, we correct it in the ledger. But if it is them that have made the error, it goes to the reconciliation statement. So in this case, let's read it again. Invoice 289 was incorrectly reflected in the account of timber suppliers in the creditors ledger. So it's already telling us that the error is in the ledger. What was the error? We added an amount that was not supposed to be added. What then should we do? We should now go where? To the creditors ledger. This is what we should do. We should go to the creditors ledger, and then since we added an amount that was not supposed to be added, we should go and subtract it. How much are we going to subtract? We're going to subtract 49,100. That is what we should do in the creditors ledger. We should go and subtract 49.1. There it is. We should be in the ledger, but what we should do is to subtract 49,100. Why are we subtracting? Because we had recorded an invoice, and an invoice is a plus. We added an amount incorrectly. The correction to that error is to subtract it. Okay? Let's quickly now go to the next error. Error B. It says, a credit note. Already before you go further, you have to think, how would I have recorded, or how would they have recorded a credit note? What sign goes with a credit note? The credit note goes with a minus. The credit note goes with a minus because remember, it is goods that have been returned. Credit note number 791 was recorded incorrectly on the statement. Okay, on the statement, they're telling us where the error is. This relates to the correct entry of the debit note in the creditor's ledger. So they're saying the ledger is correct. The ledger is correct, but the statement is the one that is wrong. Okay, let's see exactly what they're saying. Here is the statement. On the statement, we have credit note number 791, and it's 13,100. Okay, so we are having 13.1. Think about that. And then let's see how it appears now in the ledger. So in the ledger, it appears as 10,300. What does that mean? It means one of these is incorrect. Let's come back again. Let's see who made the error. The credit note 791 was recorded incorrectly on the statement. On the statement, this is them. Remember, us. So if it is incorrect on the statement, this relates to the correct. So this is the correct one. So the correct one should have been 10.3, but here it was recorded as 13,100, whereas the correct one should have been 10,300. So our credit note was, in this particular case, overstated. Our credit note was overstated. It is over. It is recorded as 13.1 when it should have been 10.3. So we get the difference, therefore. How much? If you say 13.1 subtract 10,300, how much do you get, guys? You should get 2,800. Okay, so what does that mean? That means this credit note is more by 2,800. Now it becomes very simple. If on your credit note, if your credit note is more by 2,800, how do you correct it? Remember, if your credit is more, you reduce it by recording it on the debit. I've already taught you that your credit here is a minus and your debit is a plus. So it tells us the sign then. If my 13.1 here is more by 2,800 and I need to reduce it, I need to bring it to the debit, and the debit is a plus. So I'll come now and I will say my solution is to come to the Creditors Reconciliation statement and I say plus 2,800. That will be the correction. Okay, let's see. So I'm coming now to the Creditors Reconciliation. I'm not going to record anything in the ledger because we did not make a mistake. We are correct. But they, them, made an error. So if they make an error, it comes to the reconciliation. And if they made an error, now we want to understand what type of an error. What did they do? They overstated a credit note. I corrected by adding 2,800. There it is. You add your 2,800. So the aspect has to be discover the type of error they've made, and then how best can you correct it. It's as simple as that. I want you to follow with adjustment number C. Adjustment number C. It says invoice. So once they say invoice in your mind, what do you think? Plus or minus? Invoice. What comes to your mind? Is it a plus or a minus? Invoice is a plus. Okay. So an invoice of 395 on the statement of account was for goods ordered by Ekasi Traders. Who is Ekasi? Ekasi is us. Okay, so it's an invoice of 395, invoice number 395 rather, which is on the statement. It's for goods that was ordered. So let's see what was on the statement. Here's the statement. There is goods for invoice number 395. Here's invoice number 395, and it is 12,500. Now they're saying that invoice was for goods entered by Ekasi. Why are they telling us this? Could it be that them, recorded something, but we, us, did not record? Do we see any transaction of the 22nd in the ledger? No. Do we see any invoice 395 in the ledger? Are you still looking? I don't see it. That simply means there is an invoice which was not recorded by us. By who? By us. So if it is us, where do we record? Remember, I taught you once it is us, it has to go to the creditors ledger. Once it is us, where does it go? To the creditors ledger. That means it should go to the creditors ledger. Remember again, if it's an invoice, it has to be a plus, and it's coming to the ledger as 12.5. I told you it's going to be very simple. Okay, it's an invoice that was recorded by them, but not recorded by us. If it is us we have not recorded, it comes to the ledger. Remember, the ledger is us. Okay, I know it's getting exciting now. Let's see what they're saying on D. Tembeka suppliers, which is them. Tembeka suppliers, remember, Tembeka is them, also purchases goods on credit from Ekasi. Ekasi is us. Okay, let's read this English again. I want you to follow now. Tembeka suppliers, which is them, also purchases goods on credit from Ekasi Traders, which is us. I'm going to break English a bit here so that you can understand what I'm trying to drive home. Listen to this broken English. Them also purchase goods from us. So remember, we buy goods from them, but they also buy goods from us. If someone buys goods from us, what do we call them? Debtors. Please continue following. Ekasi Traders has transferred a debit balance of the debtors ledger, General Voucher 585. Tembeka suppliers will include this in their next statement. Okay, let's see the figures that are involved here. If we look in our books, this is the ledger. So this is us. We have General Voucher 585, which is for 6,400. What is that coming from? What is this about? Let's break it down. It says Ekasi Traders, which is us, we have transferred a debit balance. What does that mean? Let's come back again. I want us to think here is a debtors ledger. Debtors ledger. The debtors ledger has two sides. It has a debit, it has a credit. Debtor is an asset. Debtors ledger, an asset. And I think you are quite aware of the debt click. the dead click. You remember the dead click? Others do the add click. It simply means we debit all our assets. It simply means now if I'm coming here in my debtors ledger, the debit is a plus, the credit is a minus. In my debtors ledger, the debit is a plus because it's an asset and the credit is a minus. Now, listen to this now. It says, ECAC has transferred a debit balance from the debtors ledger. So the debit balance, therefore, is 6,400. What does a debit balance in the debtors ledger mean? A debit balance in the debtors ledger simply means someone is owing us. They owe us. So in other words, they're trying to tell us that Tembeka Suppliers was owing us 6,400. Now, we have now transferred a debit balance from the debtors ledger, okay? Where are we transferring it? To the creditors ledger, because you can see we're in the creditors ledger. So that means I need to have my creditors ledger here. I'm going to have creditors ledger. Creditors ledger also has a debit, it has a credit. Remember, creditors ledger, creditors, it is a liability. You're correct. It's going to have a plus and it's going to have a minus. Are you still following? And then here's the interesting aspect now. When we are transferring this amount here of 6,400, we need to transfer it. How did we do it? How did we do it? How did we transfer the debit balance? If we're transferring the debit balance, it means that debt, we're writing it off from our books, we're taking it out. Okay? How do we do that? It means we have to come now to the credit side of the debtors ledger and we record 6,400. Okay, we are saying they were owing us 6.4, but we are going to transfer it to the creditors ledger. When we are transferring, this is entry number 1. This is entry number 1. We credit the debtors ledger by that particular amount. So in our debtors ledger now, the account remains at what? 0. It remains at 0 because we have a plus 6.4 and a minus 6.4. That means the account is now 0. We are transferring from the debtors ledger. In simple words, we're saying we owe them, they owe us. All right? That is what in simple words it means. We owe them, they owe us. So we are transferring now the credit balance, the debit balance rather, in the debtors ledger. And by transferring it, here becomes entry number 1. My entry number 2 now, remember to complete double entry, I have a credit. So I now need a debit. And my debit, I'm going to come here, I'm now going to say 6.4 in the creditors ledger. Okay? In the creditors ledger. That is why when you come now to your creditors ledger, you remember the creditors ledger, it's a plus here and it's a minus. You find it now in the creditors ledger on the debit side, which is the debit side. The debit side is a minus side, the minus side. This is how the 6,400 came here. How did it come here? It was in the debtors ledger on the debit side, but we were going to transfer it. We're going to write it off. How do we do that? We credit our debtors ledger by 6.4, transaction number 1, and then for us to complete double entry, we come to the creditors ledger on the debit side, and then we say 6.4. That becomes transaction number 2. So we have done that in our books. ECAC, us, has transferred a debit balance from the debtors ledger. But Tembeka will include this on the next statement. The moment you get a statement like that in the exam, they're simply trying to say, please, we, that is us, have done our part. They, which is them, have not done their part. If they have not done their part, I told you, once it is them, where do we go? Creditors Reconciliation statement. As simple as that. That means that amount needs to go to the Creditors Reconciliation. The next question you're going to ask me is, Mr. Simbi, what am I going to do? How am I going to record this? Definitely, you're going to subtract it from your Creditors Reconciliation. Let's see now. In the ledger, there's not going to be anything here. There can't be anything here because we have done our part. But in the reconciliation now, we're going to come and say minus 6,400. Why? Because there's a transfer of a debit balance in the debtors ledger to the creditors ledger. We'll treat that in the way I've explained. Okay? Please, you need to practice this transaction. It is very, very important. Okay, so in the creditors reconciliation statement, you should find that we subtract the 6.4. In a nutshell, they owe us 6.4. We owe them particular amount. So we're simply saying, please go to your books, subtract the same amount that you owe us. That is what it means in simple English. They owe us, we owe them. Simply we're saying the 6.4 that you owe us, please go subtract it from what we owe you. That is what it means in English. But in accounting, you have to follow this process. Okay. I want to come to transaction E now, to transaction E. It says, the transaction on the 24th of April is for merchandise returned to Tembeka Suppliers. Once we're dealing with returns, what sign is it, dear learners? It is a minus. Returns are a minus. Let's see what we are having here. It says here, there's a debit note. A debit note. Remember, this is in the ledger. In the ledger, on the credit is a plus, on the debit is a minus. So once we have a debit note, this debit note, remember, we did speak to it, and this debit note is on the wrong side. So if we're going to correct it, we need to take our 9,700, but then we debit it twice. If we're debiting it twice, that means we're going to have 14,200. What is it? It is a debit note. That means we have to go and say minus 14.2. We have to go and say minus twice the 9.7. Okay? If it's 9.7 multiplied by 2, it is 19,400. 19,400. 19,400. Okay? 19,400. Okay? It is 19.4. I'll repeat again. If it's your 9.7, which is here, you have to multiply by 2, then you get your 19,400. What are you going to do with this? You're going to debit it. You debit the 19,400. Where? That is the question. Should you do it by them? Who made the error? Okay? Who made the error? The error is in the ledger. Once it is in the ledger, it is made by us. So if it is us, where do we correct it? You're right. You go to the ledger. So let's come here and see. We're coming to our ledger, and we're now saying minus 19,400. Why are we subtracting? Because we have a debit note. A debit note should have been on the debit side, which is a minus, but we put it on the credit side. Once an amount is put on the wrong side, in the correct account, we put it on the right side, but we multiplied by 2. Okay. So we end up with a negative 19.4. I want us to go now to information F, and it reads, the statement of account reflects transactions up to the 25th of April. And on the statement, it simply means whatever is coming after the 25th of April, which is up to here. After the 25th of April, it was not recorded on the statement. And here we have a payment of 92,600. We have a payment of 92.6. Okay, so once we have a payment, that simply means this is done by us. We are okay. That means we have to go to them. Where do we go? Creditors Reconciliation Statement. And then what are we going to do? It is a payment. Remember, it is an EFT, and then we're going to subtract 92,600. So we're going to come here and we're going to say minus 92.6 on the Creditors Reconciliation Statement. Now, here is the final solution after we've added. So remember, this was given. This was given. I want to remind you, learners, do not ignore this when you are adding to get to the balance. You must add this to this. So you mustn't ignore the 157,400. You must add it to the 2.8. Then the amount you get, you subtract your 6.4, and then you subtract your 92.6. Then you have your 61,200. You do the same again in the ledger, you have your 61.2. Okay, I now know that you guys are following. Now, this is what I want us to do. I want us to go to the NSC June 2021. I'm going to do question 1.2. All right. It says now, Kaya Stores is owned by Peter Stolle. The business buys goods on credit from PN. So, Kaya Stores, already you know, this is who? Us. And then PN, this is them. And then it says the business received a statement of account for February 2021. The business received a statement of account. Now, use the table that is provided. I'm now reading on this aspect. Use the table that is provided. Indicate the changes to the creditors ledger account in the books of Kaya Stores and the statement received from PN suppliers to take into account the errors and omissions. So they are telling us there are errors and omissions. Indicate with a plus or a minus for each amount. And the reward is 12 marks. This should be a giveaway. Okay, so I'm just going to quickly go now. Remember, we now know what is happening here. On the credit side, remember this is in the ledger. It's a plus. On the debit side, it is a minus. Let's quickly go. Now in the statement, here is a plus and here is a minus. Okay, now let us go. All right, this is our same ledger. Here you have 101,000, and then if you come to the statement, you have 85,380. There are differences. Once we have differences, therefore we need to reconcile the moment we have differences. I want you to now look at the first one. It says, invoice number 353 on the 5th of February was correct according to the statement. This is now adjustment number 1. Okay. It says invoice 353 on the 5th of February was correct according to the statement. Let's see now on the statement. This is the statement. This invoice is 10,800. And they're telling us that it is correct. It is correct according to the statement. Where is it wrong? It is wrong in the ledger by us. How much did we record? 18,800. Okay, so if we recorded 18,800 when we were supposed to record 10,800, that means this was overstated by 8,000. It was overstated by 8,000. Who overstated? Us. What is the source document? An invoice. What is the sign for an invoice? It is a plus. So we overstated a plus. How do we correct it? You put a minus. So in other words, we have to go where? To us. Where is us? In the ledger. In the ledger, what do? We subtract 8,000. Okay, so let's come to the ledger and then we subtract our 8,000. Continue following. Adjustment number 2. PN suppliers. Okay, PN suppliers. Remember who's PN suppliers? PN suppliers is them. You're correct. PN suppliers made an error in recording the goods returned on the 7th of February. Let's see. All right. Here is a debit note of 600. Now, let's see what they did. Here is a credit note, and the amount is 600. I want you to tell me, what have you observed? In the ledger, remember, this is in the ledger. This is us minus plus. Okay, in the ledger, rather, it is a plus here, and here it's a minus. Okay, yes, here it is a plus, and here it is a minus. Okay, and then in the statement, it is a plus, and here it has to be a minus. So a credit note should have been on the credit side, but it was recorded on the debit side. By who? By them. So we are correct here, but they are wrong. What did they do? They recorded a credit note on the debit side. What should they do now? We should now go to the Creditors Reconciliation Statement. Why CRS? Because it is them that have made an error. Okay, so what error did they do? They debited an amount that was supposed to be credited. So remember what I taught you? It's going to be 600 multiplied by what? 2. That's going to give you 1,200. And then when we come now to the creditors reconciliation, it's going to be a minus 1,200. Where? In the CRS, exactly there. Let's continue on to adjustment number 3, which says, Kaya Stores entered a discount with EFT payment on the 13th of February. Okay, so Kaya is us, remember? We have entered a discount with the EFT payment on the 13th of February. PN Suppliers, which is them, informed the business that they do not qualify for this discount. So we recorded a discount, but then the supplier later told us that we don't qualify for this discount. Let's see how much was the discount. Here's the discount, 1,140. Do we qualify for the discount? No. But yet again, on one side of the ledger should a discount be? Remember, on the credit side, it is a plus. On the debit side, it is a minus. So we recorded a discount of 1,140. Was that discount supposed to be there? No. So if we subtracted 1,140, that was not supposed to be subtracted. How do we correct it? Obviously, we go and we add a 1,140. Where? Who made the error? Who recorded something that was not supposed to be recorded? Kaya Stores. Kaya Stores is us. And if it is us, where do we go? We go to the ledger. Let's see. It then means we're coming to the ledger. What are we doing? We're adding 1,140 in the creditors ledger. Nothing to do with the statement. They did not make any error. Okay, let's continue. I'm going to go now to adjustment number 4. Adjustment number 4. Let's see what number 4 says. Invoice A417. It's an invoice. Already start thinking. What sign goes with an invoice? An invoice goes with a plus. Are we cool? Yes, an invoice goes with a plus. An invoice in the creditors ledger of PN Suppliers, okay, was for goods purchased by LM Suppliers. Remember, who is us? We are Kaya. Remember that? We are Kaya. So, an invoice in the creditors ledger of PN is them, was for goods from LM Suppliers. Who is LM Suppliers? Okay, we don't know these guys. All right, now let's look into it properly. If we come to the ledger, you will find that we have invoice A417 6.4. Correct on the right side. We added 6.1. All right, we added 6.1, but these goods were bought from who? LM Suppliers. Who's LM Suppliers? He is our other supplier. Does it have to do with PN Suppliers? No, it is nothing to do with PN Suppliers. So it is an amount that has been recorded on the right side, yet it is in the wrong account. This should not have been in the PN Suppliers ledger. How do we do this? Remember, we added 6.1. What should be the correction? We should go and subtract 6.1. The correction should be to subtract 6.1. Okay, who made the error? Simple. This is the ledger. The ledger is done by us. Once it is us, where do we go? We go to the ledger again. So we go to the ledger. What do we do in the ledger? We subtract 6,100. Let's see how that is going to come out. We come to the ledger, then we're going to say minus 6,100. It's as simple as we're doing it now. We just need to do more practice. Check who did what. Once you understand who did what, is it us or is it them? If it's us, let's go to the ledger. If it is them, we go to the reconciliation. As simple as ABC. All right, let's now go to the next adjustment, which is adjustment number 5. It reads, the trade discount. Now, this is talking about trade discount. Already you should know. Okay, once we're talking about trade discount, it should have been subtracted. It should have been subtracted. It should have been a minus. On invoice 390 was not deducted by PN suppliers. PN suppliers is who? Them. So it says the trade discount on invoice 390 was not deducted by them. So it means they did not do their part. Let's see. This is in our ledger. Okay, there's invoice and the amount is 11,800. This is in our ledger. All right, and here is the statement. The statement is showing invoice and it's 12,980. The statement is saying on number 5, the trade discount on invoice 390, which is 390 here, remember 390, was not deducted by them. Here is them. Here is us. So if it is not deducted by them, how much was it? Let's get the difference between the 12,980. We subtract the amount after the discount, which is 11.8. The difference should give us 1,180. This is what was not recorded. By who? By them. As long as the error is done by them, learners, where do we go to correct it? Remember, if it is by us, it goes to the ledger. But if it is by them, where do we take it? We take it to the creditors reconciliation. Okay, now when we are in the creditors reconciliation, how do we record it? Are we going to say plus or minus? What was this? This was a trade discount. What sign goes with the discount? A minus. So we have a minus 1,180. It is therefore a minus 1,180 that was not recorded by them. Let us go and record it in the creditors reconciliation. Okay, so we're going to come to the creditors reconciliation. It has to be a minus here. It has to be a minus 1,180. A minus 1,180. Okay, so remember that it is a trade discount on invoice 390 that was not deducted by them, and then that amount should be deducted. If they are the ones who did not do it, it comes to the creditors reconciliation, and the sign should be a minus because it is a discount, 1,180. Here's the next one. Number 6, the bookkeeper transferred a debit balance from the debtors ledger account of PN suppliers. Okay, and if the bookkeeper transfers a debit balance, remember what we did with the first transaction that we did earlier on. The bookkeeper transferred a debit balance from the debtors ledger of PN suppliers to the account in the creditors ledger. All right, so remember this is by us, and we transferred, remember, the bookkeeper transferred a debit balance in the debtors ledger. So that means we are having our debtors ledger here, remember, a plus and a minus. And if we're having a debit balance, which is 7,700, and they're saying we are going to transfer that to the, should be transferred to the creditors ledger. Okay, so we're going to transfer it to the creditors ledger, which is a plus, and here it's going to be a minus. All right, so when we are here, it now means I'm now going to say once I'm transferring, I'm going to take this amount to the credit side, which is 7,700, and here it should appear on the debit side, which is 7,700. Okay, so if they're telling us that the bookkeeper has already transferred, remember the 7.7, the bookkeeper transferred a debit balance on the debtors ledger of PN suppliers to the account in the creditors ledger, the account in the creditors ledger. Okay, the amounts that I used here have to do with the invoice. The correct amount has to be 2,660. Okay, so give me there, it is 2,660 here, which is here on the general voucher, 2,660. So we should come here to the 2,660. You should read, the bookkeeper transferred a debit balance of 2,660 in the debtors ledger account of P&S suppliers to the account in the creditors ledger. So it is 2,660. So this becomes entry number 1. This becomes entry number 2. Remember, it is 2,660, not the 7.7. It is the 2,660. Okay. So once that happens, that means I'm coming now to my creditors reconciliation statement. And remember, as we did earlier on, we have to subtract 2,660. So I'm going to come here in the creditors reconciliation statement. I'm now going to come here and say minus 2,660. We have to subtract 2,660 in the creditors reconciliation statement. Okay, let's quickly move on to the next aspect. The next aspect, it says now on number 7, the statement shows entries up to the 24th of February 2021. Okay, it shows entries until the 24th. Okay, remember we've already dealt with this. So it says it shows until the 24th. That means this 7.7 is the one that was not recorded. It shows until the 24th. Once they're telling us that the statement is showing us until the 24th, whereas in the ledger, it is until the 27th. That means there are items that are in the ledger, but the items that are not on the statement. These items are not on the statement. What should we then do? We should simply take them to the statement. And then what are these transactions? It is an invoice. What sign is an invoice? An invoice is a plus. Okay, so that means I'm coming now to the creditors reconciliation. I'm going to add my 7,700. That is a plus 7,700. Now let's look at the complete question now. The complete question. So as I said earlier on, you need to include the opening balance there, then together with the 1.2, remember we dealt with it, and the 1,180, you subtract your 2,660, then you add your 7,700. It should give you your 88,040. When you come to the ledger, in the ledger, you start off with your 101,000, you subtract your 8,000 plus your 1,140, you subtract your 6.1, and then you should get your 88,040. Okay, I know now you have a good picture of what we're talking about. But now I want to do a third activity. In the third activity, we won't be having the statement in the ledger. We just get the transaction. We just get the statement, either the error or the omission. Then they tell us what we have to do. So let's go on now to activity number 3. Activity number 3. All right. Activity number 3 says now, this is coming from also an NSC November 2015 paper. It is now saying creditors reconciliation. It has to do with Comet Traders. It says Comet Traders received a statement of account from a creditor, Meteor Suppliers. So Meteor is them, Comet is us. Okay, are you guys ready? Let's continue. It says the balance on the statement did not agree with that on the account of Meteor Suppliers in the creditors ledger of Comet Traders. What do they want us to do? Complete the table in the answer book. So we have to go to the answer book. There's a table that we must complete to show how the differences must be treated to reconcile in the creditors ledger account. And we must balance it with the statement. Then what must we do? We must either add or subtract. Okay? Then we see how the balances will come about. Now, here are the balances. The balances of Meteor Suppliers in the ledger, it is 10,705, and the balance on the statement that we received from Meteor, it is 19,120. Let's see how these should then be recorded. How should these be recorded? If we come to the question, you'd find there's the account of meteor supplies in the creditors ledger of Comet. So the balance would be 10,705, and on the statement it would be 19,120. These are the balances. Let's go on now to transaction A. Transaction A. It reads, an invoice. Remember what I've taught you. An invoice, what sign comes with an invoice? An invoice is a plus. An invoice, which is a plus, an invoice for 9,870 received from Meteor Suppliers, received from them, was correctly recorded in the creditors ledger. Who does the ledger? This is us. Okay, so an invoice for 9,870, which we received from them, was recorded correctly in the ledger by us. The amount was incorrectly recorded as 8,790 on the statement. In other words, where is the error? Incorrect on the statement. The statement is by them. So they incorrectly recorded, they recorded 8790. Whereas an invoice, remember an invoice is a plus. So I'm going to say now my 9870, I subtract the 8790. Okay, I get the difference, and the difference becomes 1080. What does this mean? The amount on the statement is under by 1080, but you have to know what document was being recorded. It was an invoice, and an invoice should be a plus. That means I should now go, where do I go? Is it in the ledger or in the reconciliation? Who made the error? It is them. Once it is them, that means I will record this in the creditors reconciliation statement. Okay, so I'm going to come, statement receipt from supplier. I'm going to come here, I'm going to add my 1080. I'm adding 1080. Okay, let's quickly go to the next one. It says B. Comet Traders entered a discount of 375. Comet Traders, Comet is us. We entered a discount of 375 relating to a payment of 5,000 on the 15th of March. Meteor, who is them, they did not approve this discount, stating that the payment was received late. So we recorded a discount that they did not approve. Okay, discount, what sign? Discount is a minus. So there's an amount that we subtracted that was not supposed to be subtracted. How much was the amount? 375. That means we subtracted 375 that was not supposed to be subtracted. How then do we correct it? We need to go and we add. Who recorded something that was not supposed to be recorded? Us. So once it is us, we go to the creditors ledger. We're going to add 375. All right. So we come now. Here's my B. I'm coming now to my ledger. I'm going to add my 375. Okay. Let me quickly go on to the next one. The next one says, the statement of account reflected returns valued at 890. Statement of account. Okay. The statement is by them. Remember, reflected returns. Returns is minus 890. The creditors ledger account showed 690. This is us now. The creditors ledger, which is us, showed 690. It was established that Comet Traders, who's Comet Traders? Comet is us. It was discovered that we miscalculated the value of the goods returned. Okay, so on the statement, how much is it on the statement? It is 890. According to our ledger, how much did we record? We recorded 690. Okay, so we understated by how much? By 200. But what was understated? Goods returned, which is a minus. Who has understated? Us. That means if we're to correct it, we're going to go to the creditors ledger, then we're going to say minus 200. Who made the error? Us. Once it's us, it goes to the creditors ledger. Let's see. So we're coming now to the creditors ledger, then we're going to say minus 200. In the ledger, minus 200. Let's go to D. D reads, An invoice, remember, an invoice is a plus. An invoice for 2,160, which was received from them, an invoice of 2160 received from them was incorrectly recorded as a debit note in the creditors ledger. Okay, so remember, a debit note is a minus. So if it's an invoice was supposed to be a plus. For 2160, which we received from them, was incorrectly recorded as a minus in the creditors ledger. By who? The creditors ledger is by us. How do we correct this? It has to be 2,160. We have to record it twice. So it's 2,160. You multiply that by 2. That should give you 4,320. All right, it should give you 4,320. It is an invoice. An invoice should be a plus, but we recorded it as a minus. So we're going to go and say plus 4,320. Remember, guys, in the exam, follow the instructions of the examiner. If they want you to show the signs, it is important that you show the plus 4,320. Where are we adding it? Remember, it was incorrect in the creditors ledger. So that means I'm coming to my creditors ledger. I'm going to add 4,320. As simple as that. So I'm going to come here in my ledger. I'm adding 4,320. This is because an invoice was recorded as a debit note. All right, let's go to the next one, which is E now. E, which I think is the last error. It says a direct transfer. This has to do with a payment now. A direct transfer of 5,000 by Comet Traders was recorded in the CPJ on the 29th of March. It's a direct transfer by us, was recorded in the CPJ on 29 March. The statement of account shows dates until the 25th of March. So their dates get to the 25th. But we made a payment on the 29th. So it is that transaction which will not be on the statement because a payment was made rather when the statement is already received. Okay, so that simply means we must bring it to the statement and we say minus 5,000. Why? Because it is a direct transfer. A direct transfer, this is a payment. So all payments must be subtracted. The next thing, therefore, is to totalize now. You're adding your 19,120, 1,080, you subtract your 5,000. You say your 10,705 plus 375 minus 200 plus 4,320. And then you should then get your 15,200, which is the complete solution now. 15,200. All right, so far we have done two, whereby we had the statement side by side with the ledger. Then we have now done one, whereby we just get the transactions. You should be able to picture, once you get the one with the transaction, you should be able to picture the source document. Remember, once they say invoice, it's a plus. Once they say debit note, it's a minus. Once they say EFT, it's a minus. Once you picture that, you then ask yourself, what did they do? From there, you should be able to see the corrective measures. It is important, however, learners, that we understand that there has to be internal controls that relate to creditors. All right? And then one of the things that we must ensure is that there is adequate segregation or separation of duties with regards to creditors. For example, the same person should not order and receive goods. There should be the separation of duties. And the other aspect that I also want to allude is the clerk receiving the items from the creditors must check the delivery note against the order form to ensure that all items ordered are delivered. So this must be done physically so, okay? All documents or invoices, debit notes, so we're talking about all documents which relate to credit transactions must be correctly processed in the proper journals. So we're talking about the proper journals. That is, an invoice must go to the CJ. Okay, if you put your invoice in the CAJ, then definitely you are making a huge mistake. paying creditors on time to take advantage of settlement discounts and to avoid being charged interest. So this is one of the most important things. We must keep a healthy relationship with our creditors. So we must be able to pay our account in time to benefit from settlement discounts and also a good relationship. Transactions that involve purchase of goods on creditors should be authorized. In other words, not every person should be able to buy goods from our suppliers without proper authorization. There has to be proper authorization. Okay, and then there should be someone to check the accuracy of invoices from creditors. And then lastly, invoices to be processed or stamped before payment. So in other words, we just don't pick an invoice, then we make payment, but they should be processed before we can effect payment. I want us to look at an activity which has to do with the internal control. It is coming from one of the NSC papers. It says, refer to information C about invoice 395. Okay, so when we go to information C, we're going to look at invoice 395. It was discovered that the purchasing manager, okay, let's look, this is invoice 395 on the statement of account was for goods ordered by Ekasi Traders. Let's see on the statement, invoice 395, this is invoice 395. Remember, it is on the statement, it's a plus 12.5. So according to the statement, it shows that we ordered goods of 12.5. According to the statement, it shows that we ordered goods of 12.5. It was discovered that the purchasing manager, Bradley, had taken these goods for personal catering business. So these goods did not come to our business, but they went to Bradley, who ordered these goods for his personal catering business. So the question then is, why are these goods appearing on our statement? Since these goods are taken for his personal catering business. And who is this Bradley? He is the purchasing manager. Okay. The owner regards Bradley as a valued member of the staff. All right. So Bradley is highly regarded in the company and does not regard this as theft. What should the owner say to Bradley regarding this incident? Explain. So they want 2 points. Let's see how far we can go. Number one, the owner should ensure that Bradley must not take advantage of his position in management. That is, he must not abuse his authority, as this will lead to conflict of interest. Conflict of interest, it simply means he's putting his self-interest in conflict or first before the interest of the business. He's ordering his personal goods on the business account. That is a direct conflict of interest, and he's abusing his authority since he's the purchasing manager. It also can be viewed as wrong. It will be viewed as wrong. Why? It is unethical or devious. This is against business policy. All transactions must be authorized and documented. All right? And compromising internal controls is what this Bradley is doing. There is a lot of compromise on internal controls. The next aspect that we can also put down is that he must pay back the money. All right? The manager must pay back the money. And then if he wants to buy goods, he can open his own personal account and then he can purchase goods individually, not to conflict his interest with the business. And then he could negotiate with the owner in advance to get a special price or at cost. He should not do it individually, since he's the purchasing manager. He can actually speak with the owner so that he can buy the goods from the owner, but not to put the goods on the business account, yet he takes the goods for personal use. And it is also important to note that he could be liable for disciplinary action. That is, he might get a warning and could tarnish his good reputation. He is regarded as a valued employee, remember. And then he might be suspended, or he might receive a warning for dismissal, or he can be considered for demotion. Remember, he's the purchasing manager, if this is repeated again. All right. Now, as I conclude today's lesson, it is important that you know what is a creditor. Remember, a creditor, an individual or a business from whom we are purchasing goods from on credit. And then the amounts may not agree, that is on the statement and in the ledger. Therefore, we need to do a reconciliation. That is what we were doing. And we did whereby there was a statement versus the ledger. And we also did whereby we get amounts that are written in the errors and omissions. Very important. You need to know the internal controls that relate with creditors. You need to know how to deal with the internal control measures of the business. Now, that brings us to the end of our lesson today. Thank you so much for joining us today.